Good evening. This is Doc Severson for the Theo Night Report for Thursday, August 31st. I'll start out today's video on the S&P 500, the SPX. And actually, I've gotten a lot of questions lately on why I had a short-term bias a couple of days ago. Let me go into this why, because this is really, really important. Okay, so from the top down, this is why I use three different fractal time frames. So from the top down, the trend is obviously on the monthly chart to the upside. No surprise there. Trend is also to the upside on the weekly chart. That has not changed yet, even though we've had a little bit of selling lately. Now the trend on the daily chart, this is the important part here, because reversals start from the inside and propagate higher. So if we just move over here, let's do a little bit of hard right edge here. So first of all, if we go back to maybe Monday, right? So let's go back to Monday and look at what we saw here. A bunch of inside days on that big Tuesday candle here. Inside days generally mean that the price is just consolidating up, and what we were seeing also is a large amount of energy building up, which means there's a large amount of non-linear price behavior. When you see price basically doing something like this, what that's doing is coiling up the spring, getting it ready to move the next movement. Now, which way is it going to go is, of course, up to the price. We're not going to sit there and predict the future about which way the price is going. But let's put everything in context here. The first move down, not that impressive. And actually, this series of movements, while still a downtrend, was very, very mild. A whole total of about, what, 70 points on the S&Ps, barely a couple of percent. Not very impressive. If this is really going to reverse, we're going to start to see some big movement, big spiky movement as we move down like this. So if we're going to get a reversal, we will see much, much lower, much more volatile, much more violent price action to the downside. This, for all intents and purposes, was nothing more than just a simple bull flag, or even perhaps a pennant pattern, just a triangle consolidation in here. Now, what was really important that happened on Tuesday was a higher low was printed. So the price tried to go much lower on the missile launch over Japan, right? So there's this panic low that we came into on Tuesday morning. But all day long, that got reversed to the upside. That was really the key. And what we had to see yesterday was the price breaking above that level. And what that did was actually a technical reversal pattern, because now we went from lower highs, lower lows, lower highs, higher low, higher high. We now have a reversal to the upside. That is a full, true reversal to the upside. That means that anybody that got short on Tuesday morning, or maybe even before that, thinking that this thing is just going to collapse, have over the last 3 days been silently, quietly, in a very painful fashion buying back those short positions, and that's helping to add a bid below the price. And this is what happens when you have a squeeze like this. So today was just one more example, as we've certainly broken out above this descending trend line to the upside. Now, I also mentioned the other day, last Tuesday, I said short-term bullish, longer-term watch for the trap door, because this is exactly what we typically see on something like this. Is we see a big, strong move coming out of here, and everybody that's on the bullish camp collectively wipes their brow and says, well, I suppose we can expect to see an underlying bid going forward into September. And that may or may not be the case. A lot of times what you will see is that strong moves like this generally, or strong moves like this can generate a lower high. And this is what I talked about on Tuesday, saying watch out for this if this happens, because just as often we see this, and let's go back and zoom out on here, just as often we see this build structure like this, where we see a dip down and then a lower high, and then everything just falls to pieces. A great example of this occurred back in 2011. Okay, so I've pulled the chart back to, and this is the S&P again. This is the summer of 2011. So here we are 6 years later. but I remember this like yesterday just because of the very difficult price action that we had. So strong rally. This is really where, if you recall, this is back in 2010 when Ben Bernanke first announced at Jackson Hole that he was going to be printing money, monetary easing, and this really started just an amazing trend that we had to the upside, right? So we did have a couple of corrective periods into here, a general uptrend still, and then we got into this really kind of quiet and melty period to the downside. So this is still what I would consider to be corrective action, but notice how mild it is, okay? Hint, hint, it's very much like what we've seen over the last couple of weeks. So now as we get into the old hard right edge here, what we saw was a very strong rally that came up from here, okay? Just like what we've seen. Also notice the higher low that trapped all those shorts that thought that they were just going to ride this thing down, right? So that traps the shorts. We get the strong short covering rally to the upside. And here's the dangerous part that nobody was anticipating, and trust me, having lived through that, I would say nobody was anticipating this, right? What happened was we end up, now so far this is nothing more than a pullback here. Normal pullback, everybody's still going, oh good, a pullback. I wasn't able to get into that, so now I'm going to go long on here. And then what we saw was, and this is the tricky part, this is how the market always ends up fooling the greatest number of people. It prints a lower high up here on the daily chart. And this lower high is also, by extension, a lower high on the weekly chart. So this is how markets reverse. They start from the smaller time frames and they propagate up. So it starts first as a lower high on the daily chart, and then this entire pattern here becomes a reversal and a lower high on the weekly chart. Okay? So watch as this folds out, and this is why I'm telling you guys to be cautious of this little breakout that we've had here, because we've seen this movie before, and this is where we got absolutely hammered back here in August of 2011, 6 years ago. Now, lightning does not strike in the same place twice. We don't expect to see the same thing, but this is kind of a replay, if you will, of some of the price action that we've had lately. Very mild pullbacks, breakouts, strong little breakouts here. So notice how this sets up a lower high. So if we go back to today's price action, let's go screaming up to today's action, right? You can see how mild these pullbacks are, strong movement to the upside, but watch for this to arrest itself. Be careful that this doesn't turn into a lower high, and then we'll see that reversal pattern. Also, what we would see along with that is also we would see this longer term trend line, which is very well defined. We would see this broken as well too. So that'll be another hint for you to be cautious of, is watching for that trend line to be broken to the downside. So understand what I'm trying to say here. I'm not predicting a move to the downside. I'm just saying be cautious, because we've seen this movie before. And this is precisely when these lower high movements will set up, is after a strong short covering poke to the upside that arrests itself below the recent highs, sets up a lower high, gets everybody on the wrong side of the price with too large a position, way too complacent, just expecting the market to just naturally rise from here. And this is where you see extremely strong moves to the downside as all those people get on the wrong side of the tape and have to basically execute market orders just to get out of their positions, and that further drives the price down in a more violent fashion. Now, the last thing that I will say here is the party's off for the bears if we end up printing new highs, especially if we end up going above 2,500. If we end up coming up here to 2,500, printing new highs, then it's going to take another corrective structure. We have to kind of start from scratch in terms of the corrective structure to the downside before we can set up that, perhaps, that lower high on the weekly chart. All right, folks, that is it for today's report. Thanks for listening, and we'll see you this weekend. Take care.